Hey guys, how's everyone doing? Hope everyone is well. Look, I want us to talk about this setup, right? There's a trade that I took in Euro USD last week. So as you would know, week 3 and week 4 has been very bearish for Euro USD. And we had to capitalize on a sell position that we'll talk about just about now. Okay. Now let's look at the setup, right? The setup is very important, okay? So for any downtrend, this is a downtrend. We would know that in a downtrend you'll have lower highs and lower lows, right? I'm not sure whether it's higher lows or lower low, or it's lower lows and lower highs, okay? So you want to take a position, a sell position, when price retraces back to a certain point of interest, okay? So when price retraces back to a point of interest, you want to make your position here and probably targeting these lows or any other low or point of interest or liquidity pool just about below this low, okay, right? So this is how your trade would look like, okay? So you'll have your point of interest somewhere here, and then you'll take your trade probably to this low or to any order block or any area of interest. Okay, so the point of interest, normally it is the last up close candle that took out liquidity. Okay, what do I mean by that? So you'd find that the point of interest would be probably there was liquidity generation, and then price took out liquidity, broke structure, and then the point of interest becomes this area where now there is this last up close candle, okay, before the move down. So that could be the first part of having a point of interest. So you want to trade the move when price returns back to this zone, this area of the candle, okay? Point of interest could also be a drop based drop, right? In this case, because we're looking for a sell, we're having a drop, price consolidating, right, generating liquidity, and probably stop hunts above, and then it drops. Okay, so it's normally a very consolidating type of a trading range, right? And it's very tight, so it's probably about 3 or 4 candles depending on whichever time frame you are able to dismantle the consolidation. But it's very tight, so it's a drop based drop, or it could be a candle. Okay, we spoke about 2 types of point of interest, and now let me define the setup that I took the trade on. Okay, so this was the case. Price was moving down, all right? So here I was expecting price to return to a certain point of interest. In this case, it has been a drop based drop, okay, for me to take price to perhaps these lows. So there was a drop based drop here, and I had to enter the trade for a sell position. Okay, is that fine? Great. So this was the setup, the overall setup. But now let's talk about the entry criteria. All right, so it's 2 things. It's one thing, and the one part of the story is having to know the setup, and the other part is now understanding how did I enter the market, okay, which is very important. Okay, so this is how I've entered the market. I've entered the market based on structure. So you would understand that when you are moving to the upside, you will make higher highs and higher lows, right? And then what happens when you want to now take a sell position? You'd want price to first reach the point of interest. That would be, in my case, a drop based drop. Now let's remove that. In my case, it was a drop based drop, and you would want to see price rotating, starting to break structure on the low side, right? So you want to see price reaching the point of interest and start moving lower. Okay, so this is when you are ready with your setup and your entry to perhaps capitalize on this move going lower. So how it normally happens, you want to see price reach the point of interest, and then it has to break the last low that was created while it was still uptrending. Okay, then you want to see price returning to a candle, okay, which is called the institutional candle. Others call it the last up close candle before they move down. Okay, there's a lot of names. Others call it the order block, whatsoever. Okay, we're just gonna use institutional candle for now. All right, so this becomes your setup, your entry criteria. Sorry. So I've shown you the edge setup. So the setup is the drop base drop that you will normally find on your higher time frame, and then you wait for price to perhaps reach on those areas, and then you are going to look for price to enter into the drop base drop zone, and you want to see price changing direction or rotating and start breaking structure to the lower side, and that would confirm to you that market has changed direction. Okay, we're good now. So let me show you how the trade looked like before we continue. So this was my forecast before the trade could materialize, before the start of the week, the dates and so on, you can see. So this was what I was looking at. There was this point of interest. It was on a 30 minutes with this bold box, and then on a 1 hour we had this drop base drop. Okay, so on the 30 minutes this is also a drop base drop. Fine. So I was targeting that price could at least take the buy side liquidity and tap into the drop base drop for a reversal to the downside. Okay, so price was heavy bearish, so I kept in mind that it could return to any of the closest points of interest. So hence, when you're marking your point of interest, you have to make sure that you mark as many and as closest to price, more so when you're having a very strong bearish order flow. Okay, let me show you the strong bearish order flow. For interest sake, I'm on a daily time frame. So price started falling from the 22nd up until, is it the 22nd? No, I think it's the 14th, up until the 27th. Okay, so I'm not sure if this is about 2 weeks or 1 week, but price was falling. So you would want to use any point of interest that is closest, okay, to price. All right, so let's just go back to the trade that I took. Okay, all right, so I'm normally doing intraday trading. That would mean I'm planning to be in the market and out the market at a very short space of time, and I can confirm this trade took about 2 hours to materialize at most, and this is what I was looking for. Okay, so I'm not sure whether you could remember from this picture that I was expecting price to take this buy side liquidity, tap into the drop base drop, either this one or that one on top. I was okay, I was fine. So whichever was going to reverse price, I was gonna take the trade there. All right, so this is now the buy side liquidity. Okay, this is now the 30 minutes drop base drop. Fine, you'll forgive me with the markups. It looks a bit busy, but just for the purpose of this exercise, try and watch this video again and again to perhaps get the concepts thereof. All right, so this is a drop base drop. Okay, this is now a 30 minutes time frame. All right, so that's the point of interest. So what happened? Let's see. Okay, we do not trade Asia, so I do confirm that the price action, this price action from this point, okay, from this point on was Asia. So after Asia came London. So that's where we start trading. I'm trading only the London session and the New York session, because that's where you would perhaps see price moving with a very high volume and also giving you those peeps that you're looking for. Okay, this is how the trade materialized. We have seen the buy side liquidity being taken. Okay, this is very important. You see price taking the liquidity, number one. Okay, I think let's perhaps write that down so that we make sure that we get the flow. So you want to see price taking out liquidity. You want to see price take out liquidity. Okay, so number two, you want to see price tapping into the other block or your area of interest. Let me just say point of interest. Okay, so you want to see price reversing from the point of interest and this is where you want to see your entry criteria playing out, right? Criteria. Okay, so exactly that. So what do we want to see? We want to see price take out liquidity. Where was liquidity? This was the buy side liquidity, which was generated from this high. And not only is it a buy side liquidity, it's a previous day high, which is important. Okay, and price did what? It took out liquidity using this candle. Okay, so we'll talk into detail as to why I did not look for any entry here, but just in general purposes, price was not in the point of interest. So this is something to know. Even though liquidity was taken out by this move, price has not reached the point of interest. So you want to see price take out liquidity, tapping into your point of interest. Okay, great. So this whole move was the move that tapped into the point of interest. So this is where you start to see what price reversing from the point of interest, and then you focus on your entry criteria. Okay, so I'm not sure whether you guys are still remembering the entry criteria, but I'll just write it down. Let me find some space. Okay, we'll use this one here. I won't write it down, I'll probably draw it. So the entry criteria looks like this. When price is doing higher highs and higher lows, you want to see price break structure and return to the last up close candle or the order block or the institutional candle, and then moving lower. Remember, we're in a bearish scenario, so we are looking for bearish setups, right? Hence this setup. Okay, so to perhaps pause there and just show you the evidence that I took the trade. This is the evidence I took the trade. This is South African time, but I entered somewhere there. Okay, so intraday trade. This is the setup. Okay, let's just dive into it quickly so that we are able to perhaps see how the entry went like. Guys, to be quite honest, I was scared because price started breaking structure to the low side, right? Started breaking structure bearish without me having entered the trade. Okay, this is what I mean. Let's remember now, this was Asia, okay, the green side. This was New York, London, sorry. London took out liquidity. If we can check, it didn't break structure. All right, so structure was still kept. So instead, it gave us another structural reference and kept on going higher till it reached the point of interest. How interested are we? Very excited. So now we want to see price breaking structure to the low side and then returning back to the candle, order block candle that took out liquidity. Then liquidity is on the other side. This is the whole candle. However, the last up close candle being the order block candle or institutional candle is the one that we're gonna look for the setup, right? So I use fractals. I would advise people to use fractals more so if you're a newbie. Even if you are a person who's professional and is doing good, I mean, fractals are for free. Anyone can use them. Instead of you searching for the structural references, you can just put fractals and it can show you where is structure, so that you know that price is about to rotate and break structure to the desired direction. Okay, so now that we are on it, price broke structure. I would like to make my reference red so that perhaps we can distinguish it. Okay, so price broke structure, and I was scared because it kept on breaking structure. This was the first structural reference. This was the second one. It broke to the second one. So anyone trading smart money concept would say, you know what, let me just now highlight this area of this point of interest, and perhaps price will reverse there and I'll take the trade there. I'm no longer gonna look for any point of interest from this candle. That's good and well, but probably it could be early for you to think so, because what normally happens, price would play along and give you the presentation that it will never reverse back to your point of interest, okay? Which it did, right? It came back right straight back to where the candle is, all right? So anyone could have taken the position like this, okay? There's no sin there. You want to put, let me just remove the fractal points now. There's no sin there at all. There's no wrong doing. You still have a 6 pip stop loss, and then probably you'll have your 2 to 3 RR, I don't know. But I normally don't do that. I rather search for further point of interest within the candle for entry, so that I can optimize my entry. Okay, so what are the point of interest within this candlesticks? This candlestick being the institutional candlestick, we are having a void. Okay, we'll talk about insufficient price action when we find time, and then also we are having an order block candle. All right, so to anyone who would want to analyze this part of structure, you would have a shift of market structure here, and the last order block candle would be that one. So this is shift of market structure. We'll talk about it on another video, but then you would want to have your point of interest there, which becomes your entry. This is where you execute your trade. I have entered the trade based off the void. I could have went and entered in between 50% of the void, or at the beginning of the order block candlestick, and obviously you would want to put your stop loss above the high that was created. Okay, but I only opened here because I still have a full-time job, so I didn't sit in general to sorry about that. I didn't sit in general to watch the market. I sort of had an order there and I left, and I was triggered in. Okay, so what happens after you're triggered in? Look at how quickly price draws far away from that area. Okay, so it drew far away. First target was this equal lows created in between Asia, not in between Asia, but first target, I'm trying to find this one, was this area. Okay, second target is 50% of the Asian range. We'll talk about it, which is 50%. Second target is 50% of the Asian range. Okay, third target would be the low of the swing point. Okay, that was created on the higher time frame. So if you go to 30, we'll just use the 30 for now. Okay. All right, let's just delete that. Sorry, I'm moving away from the mic. We'll just delete that, and then we'll just take that day. That will be your third target. But how I have approached this, I would know that from a London point of view, London normally ranges 30 pips. Okay, if you would study the chart, you'll see that London is normally 30 to 40 pips of range before New York. So you wouldn't want to marry a directional bias. You would want to take price at the closest, right? So I took price around about the 50% area, right? Took TP to me in detail, around about that area. So my apologies, I didn't screenshot the TP part, all right? Which of I think I'll improve in the next coming videos. But what do you have to take home from this video? Now let me give you the homework, the lunchbox. Wow. Lunchbox is trade with the higher time frame directional bias. Okay, trade with the higher time frame directional bias. Okay. 2, look at the closest POIs to take trades from. Okay, so you would want to define in detail your setup and entry criteria. Okay, entry criteria. So only enter when price has tapped the POI and proven to reverse. Now you are looking the reversal at the 1 minute time frame. Okay, a minute time frame. This is now intraday trading, guys. All right, the 5th point is see break of structure. Okay, you want to see price breaking structure and then returning to the institutional candlestick. Okay, great. So trade with the higher time frame directional bias. Look at the closest point of interest to take your trades from. Define in detail your setup and your entry criteria. Only enter when price has tapped the POI and proven to reverse in a 1 minute time frame. So you need to see price break structure returning to the order block for entry. Okay, for entry. So let us just look at these things in detail before I end the video now. So it says trade with the higher time frame directional bias. As we've mentioned, it was bearish, so we're looking for selling opportunities. Second point, look at the closest point of interest to take a trade from. Where were the point of interest? People could have argued that there's the void here. That is a point of interest, that's correct. There is a drop-based drop here. There's a drop-based drop there. So these are all the point of interest, but what's important is that it has to be the closest. Okay, so the closest point of interest, so you have to make sure that it's the closest, and you want to see from that point that price reaches there. Okay, so define in detail your setup and entry criteria. So you want to know what you'll do when price reaches that area, which of we spoke about it. Okay, so you'll rewind back and look at the entry criteria. So what do you do when price reaches that area? Okay, so only enter when price has tapped the POI and proven to reverse. So normally price will take up liquidity and play along the liquidity zone. You don't want to take a trade here, right? You want to see price reaching to your point of interest before taking the trade going lower. Okay, so C, break of structure, returning to the institutional candle for entry. Okay, great. This is now for entry purposes. So when price has When price has done its higher highs and higher lows, you want to see price breaking structure and returning to the institutional candle for entry. So this is where you'll take your entry there. Okay, so that's it, guys. I'm not sure how long the video is. I hope it's not so long. But either way, please subscribe, like, comment, ask questions. I'm here to help. And please see my Instagram page. And yeah, till we meet again, guys, enjoy. Goodbye.